Hello everyone and welcome back. In today's video we will be discussing how to use both the MACD and the RSI. I hope I give everyone a better understanding of these indicators along with things to watch out for when using these indicators. If you find value in this video, please like and subscribe, and with that let's talk about how to use the MACD and the RSI. And welcome back. We are going to go ahead and start with the MACD. The MACD is the Moving Average Convergence Divergence, or MACD, is a trend-following momentum indicator that shows the relationship between two moving averages of a security's price. The MACD is calculated by subtracting the 26th period exponential moving average, or EMA, from the 12th period in EMA. The best way to put it is that the MACD measures the strength of the momentum of an asset and how strong or weak that uptrend or downtrend is. Let's go over a visualization of the MACD. The blue line is the MACD line, while the red line is the signal line. And also, at least for a trading view, you can customize the colors, but that's what many default MACDs are. When the MACD, the blue line, crosses the signal line and is above the red signal line, that means we have bullish momentum. The bars are the histogram, and they indicate the difference between the MACD line and the signal line. The larger the bars, the bigger the momentum. In this case, they are green due to being bullish. Likewise, when the signal line is above the MACD line, that indicates momentum to the downside, and it's bearish, and the histogram bars are red. Now let's go over an example. We're going to go ahead and look at ARKW, the ETF of ARK Investments. Now my MACD is modified and looks a lot different than the traditional MACD, but however this light green line right here is the MACD line, while this yellow line is the signal line. Here on November 17th we got a bullish convergence, and up here we can see the price action is starting to move to the upside. We get a 2 bars above the SMA line, which indicates a possible uptrend. And we did in fact get an uptrend to the upside. And down here at the MACD, you see the MACD line is above the signal line, and the histogram bars are getting larger, indicating that momentum is going to the upside and getting stronger. Also know that because the MACD line is flat doesn't necessarily mean the trend is over, and also just because right here you can see the MACD line is below the signal line, which is bearish. However, we still get an uptrend here, and you can see it's very weak because those histogram bars are very small, indicating very low momentum to the possible downside, but the price action kept moving upwards. Finally, we did get a bearish divergence right here on December 24th, Christmas Eve, and we got momentum to the downside. We got big bars to the downside here, indicating momentum was strong to the downside, and we got the MACD line below the signal line, which is this yellow line right here. And then again we got recently a bullish convergence, and then again positive MACD. See the candlesticks here is starting to die down, but sometimes it will bounce back up, or it will just bounce down, and then you'll see negative or bearish histogram bars. Now moving on to the RSI. The RSI is the Relative Strength Index. Is a momentum indicator used as a technical analysis that measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock or other asset. It is, like the MACD, a momentum indicator, but it tells you whether a stock is overbought or oversold. Let's look at a visualization. The 70 zone is at the top, while the 30 zone is at the bottom. The 50 zone goes right through the middle. Between the 50 and the 70 is the fair value zone, meaning a stock is at a fair price. Between the 50 and the 30 is undervalued. Now when the indicator is above 70, that means the stock or asset is overbought and the bulls are in control. While if the price action is under 30, it is oversold and the bears are in control. When it rides the 50 zone, that means there's sideways price action and indecisiveness in the market. I have to offer a bit of a warning. Just because something is oversold does not mean it won't go down even more. Likewise, if something is overbought does not mean it will dip immediately. Let's go over a real example. Here we're going to look at ARKW again. Right here is the 70 zone, and here's this 30 zone. You can see here that between December 17th and Christmas, that ARKW was overbought for a bit, and then it eventually around, like I said, December 24th, we saw a good dip to the indecisive zone. So you can see with the price action, we're overbought in this area, and then eventually, boom, it goes down, takes a small dip, and then we see some sideways price action correlating with the sideways price action down here. Then eventually, we see an uptrend that's happened just recently to the upside right here. And then you can see it briefly going into the oversold, or excuse me, the overbought section, but then took a small dip and then continued on, and hopefully it continues on to the upside. You can see little dips here as well. You see it dipping out of the overbought zone, but then eventually going back into the overbought zone, and then another dip. And this, I use the RSI to basically see where we are. So if you're in this zone, it's obviously riskier to buy into a stock that is or cryptocurrency or forex that is overbought than it is to buy it at fair value or undervalue. However, because something is overbought doesn't mean it will go down anytime soon, nor does it mean that the uptrend will overall end. We see, if we look at the daily chart where we were on the 4-hour, the uptrend is still going up despite these little dips and overbought dips. Also, like I said earlier, just because something is in the fair value or undervalue or oversold doesn't mean it won't keep going down. For a little bit we saw it keep going down. You could have bought right here like, oh, it's down, but then you would have lost more and more money, and then finally would have seen a reversal right here and then to the upside. ARKW is kind of has overall upwards trend, so you can screw up a few times and eventually it will recover, or you'll make a profit if you buy at a bad entry. But with other assets, like especially crypto, if you buy at a bad entry, like let's really quick look at that Bitcoin. Yeah, if we bought right here, and this is fair value, undervalue, you would have saw a small little upside, very short-lived upside, but then to the downside again. So you want to be careful just buying something because it's undervalue or fair value. You want to look at other indicators to determine whether or not it's a good idea to buy. Is it the price action above the SMA? Is it the MACD in positive territory? You know, you have to have rules for yourself to decide whether it's a good entry and not just go off one indicator. Well, that about wraps up today's video. If you liked today's video, please like and subscribe, and I will see you next time. Thank you.